Imagine this. You've just been accepted into graduate school. You're excited, you're motivated, but then you look at the tuition bill. It's massive. Your stomach drops. Scholarships and grants don't cover enough, and federal student loans cap out before you even get close. So what do? That's where the Graduate Plus loan steps in. But here's the big question. Is it actually the right choice for you? Stick around, because by the end of this video you'll know exactly when a Graduate Plus loan makes sense and when it could become a financial trap. Number 1. What exactly is a Graduate Plus loan? A Graduate Plus loan is a federal student loan specifically for graduate or professional students. Think law school, med school, MBA programs, or even a PhD. Unlike regular federal student loans, Graduate Plus loans don't have a strict borrowing limit. You can borrow up to the full cost of attendance, minus any other financial aid you've already received. For example, let's say your tuition, fees, and living expenses for the year total $60,000. If you've already gotten $20,000 in scholarships and standard federal loans, you could borrow the remaining $40,000 with a Graduate Plus loan. Sounds flexible, right? But flexibility always comes with fine print. Number 2. The interest rate and fees you need to know. Graduate Plus loans charge a fixed interest rate. As of the 2024 to 2025 academic year, the rate sits at just over 8%. That's noticeably higher than regular federal direct unsubsidized loans, which hover closer to 6%. On top of that, there's a loan origination fee. This is a percentage taken out of your loan before you even see the money. For Graduate Plus loans, the fee is over 4%. So if you borrow $20,000, you're not actually getting the full $20,000. Around $800 disappears instantly in fees, but you'll still owe the full $20,000 plus interest. That stings. But it's important to know before signing. Number 3. Credit check. Yes, it matters here. Most federal student loans don't care about your credit history. Graduate Plus loans do. To qualify, you'll need to pass a basic credit check. They're not looking for a high score like a mortgage lender would, but they are checking for major red flags like recent bankruptcies, foreclosures, or defaulted loans. If you have an adverse credit history, you could still qualify, but only if you add an endorser, which is basically like a co-signer. Or you can submit documentation to explain your financial situation. Example, imagine a student named Sarah. She had a credit card that went into collections 2 years ago. That shows up as adverse credit. Sarah could still get a Graduate Plus loan if her mom co-signs, but then her mom is on the hook if Sarah doesn't pay. This makes the Graduate Plus loan different from the safety net of other federal loans. It's more like a hybrid between federal and private loans. Number 4. Repayment options. This is where Graduate Plus shines. Here's the big advantage. Even though the Graduate Plus loan feels stricter upfront, once you have it, it falls under the same repayment protections as other federal loans. That means you can choose income-driven repayment plans, like PAYE or SAVE. These limit your monthly payment to a percentage of your income, no matter how much you borrowed. You can also qualify for public service loan forgiveness if you work for the government or a nonprofit for 10 years. Compare that to private student loans. With private lenders, repayment is rigid. No forgiveness, no guaranteed income-based options. Graduate Plus loans give you flexibility after graduation, which can be life-saving. Number 5. The hidden cost of borrowing whatever you need. Here's where things get dangerous. Because Graduate Plus loans let you borrow up to the full cost of attendance, there's a temptation to just sign off on a huge amount. But think about it. A law student named James borrows $40,000 every year for 3 years. That's $120,000 total. Add interest while he's in school, and he could graduate owing closer to $140,000. Now, if James becomes a high-earning attorney, maybe he can handle that. But if he struggles to find work, that debt can crush him. The freedom to borrow unlimited amounts is powerful, but it's also risky. Number 6. When a Graduate Plus loan makes sense. Graduate Plus loans make sense if your degree is high cost, and you're confident the career path will give you the income to repay. Think medical school, where salaries for doctors are very high, or law school at a top-tier program. They also make sense if you plan to use repayment programs like public service loan forgiveness. For example, If you want to become a public defender, a Graduate Plus loan could work because PSLF could erase much of your debt after 10 years of qualifying payments. Another good reason is if you've maxed out your unsubsidized federal loans, and your only other option is a private loan. The Graduate Plus loan usually offers better protections than going private. Number 7. When a Graduate Plus loan might not be right for you. This loan may not be a smart move if your degree doesn't lead to high earning potential. For example, borrowing $100,000 to pursue a master's degree in a low-paying field like social work or fine arts could leave you financially trapped, even with income-driven repayment. It also may not make sense if your credit score is poor and you'd need a cosigner. That puts someone else's financial stability at risk. And remember, interest builds while you're in school. Unlike subsidized loans, there's no break here. If you borrow a lot, your balance grows fast. Number 8. Strategies to reduce your Graduate Plus loan debt. If you decide to take a Graduate Plus loan, you can still keep your debt under control. One strategy is to borrow only what you truly need. Instead of borrowing for the full cost of attendance, try covering some living expenses with part-time work, assistantships, or scholarships. Another strategy is making small interest payments while you're still in school. Even $50 a month can stop interest from snowballing. And don't forget, after graduation, consolidation could help simplify your repayment if you have multiple federal loans. Example: a student named Anna borrowed $10,000 per year in Graduate Plus loans. During her second year, she started tutoring undergrads to cover her rent. That meant she could reduce how much she borrowed, saving herself thousands of dollars in interest long-term. Number 9. Graduate Plus versus private loans. What's the difference? Let's say you've hit the max for federal unsubsidized loans, and now you need another $30,000. You have two options: a Graduate Plus loan or a private loan. Private loans might tempt you with slightly lower interest rates if you have excellent credit. But private loans rarely offer income-driven repayment or forgiveness programs. Graduate Plus loans, even with higher interest and fees, give you a safety net. You can adjust payments based on your income, and you have federal protections if you lose your job or face financial hardship. So unless you have an amazing credit score and zero interest in repayment flexibility, the Graduate Plus loan usually wins. Number 10. The decision checklist. Before you sign for a Graduate Plus loan, ask yourself these key questions. Do I really need to borrow this much? Or am I borrowing extra just for convenience? Will my career path realistically allow me to repay this debt? Do I plan to take advantage of forgiveness or income-driven repayment programs? Am I aware of the interest rate and the origination fees I'll face? If you can answer yes to using the loan strategically, then it might be right for you. If not, you may want to rethink. Number 11. Eligibility beyond credit history. While Graduate Plus loans do require a credit check, they don't ask for proof of income or assets. That means you can qualify even if you're unemployed or living on savings while in school. This is very different from private lenders, who often require proof of steady income or a cosigner with strong financials. For example, a graduate student named Kevin left his job to go to business school full-time. He had no income during school, but he still qualified for Graduate Plus loans because the government only cared about his credit history, not his current earnings. Number 12. Loan limits can shape your budget. Because Graduate Plus loans allow you to borrow up to the full cost of attendance, schools determine what that cost includes. This usually covers tuition, books, housing, food, and transportation. But here's the catch: sometimes schools estimate living expenses generously. If you borrow based on those numbers without double-checking your actual spending needs, you may end up with unnecessary debt. For example, if your school estimates rent at $1,500 a month, but you find housing for $1,000, you could reduce how much you borrow by $6,000 a year. Number 13. Grace period details. Graduate Plus loans don't technically have a grace period like undergraduate loans do. However, you can request to defer payments while you're enrolled at least half-time and for 6 months after graduation. During this deferment, interest still builds. If you're not prepared for that, your balance can grow significantly before your first payment even starts. Example: a student named Rachel deferred her Graduate Plus loan for 3 years during her master's program. By the time repayment began, Her balance had grown by an additional $5,000 in interest alone. Number 14. Tax benefits from interest payments. Even though the interest rate is high, you may be able to deduct some of that interest on your taxes. As of now, you can deduct up to $2,500 of student loan interest each year, depending on your income. This deduction reduces your taxable income, which can save you money at tax time. It's not enough to erase the pain of high interest, but it's still a helpful perk to remember. Number 15. Flexibility with loan consolidation. After graduation, you can combine Graduate Plus loans with other federal loans through a direct consolidation loan. This won't lower your interest rate, but it can simplify repayment by rolling multiple loans into a single payment. It also keeps your loans eligible for income-driven repayment plans and forgiveness programs. For example, if you borrowed both unsubsidized loans and Graduate Plus loans, consolidating them means you only deal with one servicer, one monthly bill, and one set of repayment terms. Number 16. Borrowing affects your future financial choices. Taking on a Graduate Plus loan can affect your credit and your ability to borrow for other goals. Large student loan balances show up on your credit report and count toward your overall debt-to-income ratio. This matters if you want to buy a house or a car soon after graduation. Lenders may hesitate to approve you, or they may charge higher interest rates because they see your student loan debt as a risk. Imagine a graduate finishing school with $120,000 in loans and wanting to buy a home right away. Even if their income is solid, the large debt balance could slow down the approval process or reduce how much they qualify to borrow. Number 17. Potential for refinancing later. Once you're out of school, and if your credit and income are strong, you could refinance your Graduate Plus loan with a private lender. Refinancing might lower your interest rate and save you money. But beware, refinancing with a private lender means you lose federal protections like income-driven repayment and forgiveness options. For some borrowers, especially those in stable, high-paying jobs, this trade-off can be worth it. For others, keeping federal protections is more valuable than chasing a lower rate. Imagine this. 10 years from now, you could either be grateful you had access to Graduate Plus loans because they opened doors to your career, or you could be buried in overwhelming debt that feels impossible to escape. The choice comes down to careful planning, honest self-assessment, and understanding the true cost of borrowing. So what about you? Do you think a Graduate Plus loan would be worth it for your education, or would you look for other ways to fund your degree? Drop your thoughts in the comments. I'd love to hear your perspective.